All right, good morning. All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Kind of like we talked about yesterday, it would be nice to see a gap up in the market here this morning. And that's what we see. And, when I say, hey, it'd be nice to make a gap up in the morning, it's not that I'm playing for it or anything else. But when I look at what could happen and what could unfold that would set up easy trade opportunities, a gap up here today is one of those things. And it's one of those where it sets up well for both bulls and bears. What do I mean? Well, here we are with the S&P, okay? For the bulls that want to be, hey, you know what, V-shaped recovery, here we go, new highs, not looking back, right? Which is a valid argument, not supported by the metrics yet, but a valid argument breaking above the highs from the last 3 days, right? Your stop point's very easy. The stop point is very easy. You can either use today's low or you can use yesterday's close, whichever one you'd like, to be, if you're going to be a little more aggressive, you want to be a little tighter stop, you use today's low. You want to be a little more conservative, not have as much whipsaw chance, you use the close from yesterday. But it sets up a really nice risk reward for the bulls, right? Now, I'm not saying probability of direction, right? But in terms of just pure risk relative to the reward potential, if you're right and things go up, it's a really nice setup for the bulls, right? At the same time, the bears don't have a great risk reward setup on this, but today's lows break. There's your trigger. You go. And you use whatever the high that is set, today, maybe tomorrow, maybe Monday, whatever it might be, as that stopping point. And so it's a very kind of very nice to see type of gap in terms of, just kind of the way the way it plays. Take a look here. In fact, let me back up and we'll come back here to back in October. And here we had market drop, right? And, a couple pretty ugly days, very similar to the drop we've had here, right? And then we get a stabilization day or two, and then we get kind of this pop day, right? Big pop day. It was same thing, right? If you want to be a buyer, you want to play for that V shape, which I know looks dumb and when we add the hindsight, but let's face it, how the market looked right here is exactly how it looks today. Okay, if you want to play for the V shape, great. Today's low is the stopping point to go to play that, and if you're bearish, all right, today's low breaks. There's your opportunity to get in using the high that is set during that time period. And so, it's almost an identical setup for both bulls and bears to what we saw mid-October last year. And, one of those where we've seen it come into play several times, over the last while. We don't have a bottoming like this right here, right? And to me, these are the easier bottoms, right? And we played this one for the challenge, but these are the easier ones where you get a breakaway day, where basically in one day you erase 4 days worth of selling, you gap up above the action from the prior day. This is a very high probability, breakaway type action. This one here, the probabilities are pretty mixed. And so it's not one where I look at and say, oh, well, the Bulls have a huge advantage or the Bears have a huge advantage. But it is one from a risk-reward standpoint. If you're itching, you got to play it. Well, man, it sets up. It sets up nicely. Now, I'm looking for more, sell opportunities, but again, I don't have them here just yet, or opportunities to jump in there. And I'm talking personally, not for the challenge. For the challenge, I'll trade whatever signals. But I'm looking for some downside. One of the things for me that would change my mind is if the metrics changed or if we saw a trajectory change in Caterpillar. One of my biggest concerns with what we see in the market right now is the fact that, yes, the market is bouncing, but Caterpillar's not. Caterpillar is not participating. And when we talked about trade war stuff, earlier, right after Caterpillar's earnings, I mentioned that, one thing that Caterpillar earnings show is that if the trade war intensifies, Caterpillar's got a long way to fall. If the trade war is solved, Caterpillar has a long way to rise. And Caterpillar may be the best way to play trade war action. And we have seen the stock, rip lower more than 10% here, in terms of, the price movement of the stock and really push on lower. And the fact that we're not seeing it really rally here is of concern to me. Now, is it the be-all, end-all? No, it's not. It most certainly is not. But, is it a little concerning? Yeah. Absolutely, there with that. Okay, so that's some of the risk reward in terms of, where some of the market stuff is set up. Whether a recovery turns into a V shape or whether a recovery turns into a W, right? It's always, technicians and chart pattern analysts love to kind of, have all those, types of terms. The reality is that V-shaped recoveries are not as common after bloodbaths, high-volume bloodbaths. What is common, what is much more normal, is this type of action. We can go back through the years, and we do see a few V-shapes, right? Perhaps the biggest one in 2014 off of the, Ebola scare, right? Where, the world was going to come to an end because of Ebola, and, then magically it was contained. So the market had this kind of nice V-shape element. But most big drops in the market are multi-leg, drops. And this one has been a little too severe to, for me to say, hey, the chances of a V-shape are very, very high. I'm on record as saying I do ultimately believe this market goes to new highs. I do believe that will be the case. But I'm much more anticipating this type of action or even a worse type of action than I am, anticipating a V-shape. And here's the thing. When a market has a V-shape on it, and if you miss the V, it's not that big a deal because almost all V-shapes, what do? They go higher. So, if you do see the V, great. It'll scrounge around for a little bit, and then it'll break out higher. It does almost every time. So, it's not one where I look and go, man, if I miss out, I'm in a world of hurt or anything of anything of that nature. So anyway, that's kind of quick look here at the market. Not a whole lot has changed news-wise. We did see the change yesterday with the Fed. Some of the Fed speak. So, that is something definitely to keep an eye on. We did see last night China peg the yuan, a little bit lower back to 2008 levels, I think was the last time it was pegged that low. Chinese yuan and how it moves, comes into play sometimes in the market. I think this is the first time in like 5 years that the market's really been all that concerned about it. And it's amazing how a little bit of sell action, a little bit of volatility, now everybody's looking at one thing, right? And going, oh, well, now this is the be-all, end-all. This is the big thing. It's the yuan now. And it's always comical when it comes to the market, how those things, ebb and flow. And, we'll continue to see it happen. I did price out some VXX calls this morning. I'm not ready to pull the trigger on them here just yet, but did price some of those out. I don't think we're in good enough retracements yet to really be aggressive on the short side. But one of the things I'll be looking for here today is, do we see some sort of 20,000 volume top? And I think if you're on the bearish side, that's what you're looking for. You're looking for a 20K top, 20,000 volume in 1 minute on S&P futures, and then you probably have the top in for the day. Until you see that, it's just one to, hey, be patient. Be patient, wait for the right trigger, and go. Now with the challenge, we have two 3-7 upside crossovers today. One is on UPS. This is one that had a downside 3-7 crossover earlier this week. Didn't trigger bearish, has an upside crossover here. This is one that has the potential to trigger bullish this afternoon. So I'll be very interested to see, how that comes in. The consolidation risk here this morning is a little too high, but does have that bullish potential. And then Procter & Gamble also has that bullish potential, has that 3-7 crossover to the upside happening here today. So we do have two upside crossovers. We don't have any downside crossovers here. And let me kind of show it to you here. I'll just run the scans just so you can kind of see, and we'll see this a little closer. Here are the two upside crossovers, right? And neither of them qualifying as triggers. But the downside crossovers, let me show them to you here. It's pretty blank. Let me get the a list back to the challenge. Well, I'll just go with this list, right? There are three in the whole S&P 500, and none of these three are on the watch list. So, anyway, there's nothing there for me to react to here for the challenge yet. Believe me, I'm itching just as much as anybody to, jump into the next trade. It's one of those, I hate being in cash for, longer periods of time. But, I knew this is one of the elements that would come in with automating the challenge or having the algorithm run the challenge more than me. And we're kind of in that mode right here. But I promised yesterday that I would go in and do a quick kind of just look at the watch list for the challenge, just kind of scan through some of the stocks, where they are, some of the potential to trigger that they may or may not have. So let's go do that. I'll scroll through these and I'll talk about a few. I won't talk about all of them. Here's Alcoa. This is one that I just don't expect a trade to come in anytime soon, just based on what the price action has been. American Airlines, same type of thing. And this is one of those that back in June had that 3-7 crossover, but was never a trigger because it was coming off of new lows. So never really had a chance to play it. So we'll see kind of how this shapes up. But here's Apple. This is one that could trigger bullish on a 3-7 crossover. So this is, if you're looking and saying, well, you know what, if we just have major upside, is the challenge going to miss it? Well, it's something where when I look at some of the stocks that are out there, I really don't think the challenge will miss it. I think, we'll see bullish signals come in on something like an Apple, and we'll see several stocks that kind of look like an Apple right here. Amazon, the chances of triggering are almost nil. This is very much a June type of situation. And again, it doesn't mean it can't go up. But in terms of a low probability, upside crossover is what we would see. Arconic, which had an upside crossover on it yesterday, it's up about 1% here today, but consolidation risk was too high. Boeing, which is one I would love to play, to the upside. It's one where if you listen to some of the commentary the other day on Boeing, it's this is a stock where, man, we can see the 500 mark come in if the market settles, and when there's a little bit of more clarity to the airplane situation. This is one where I think all the bad news is kind of priced in here to it. And when we look at sectors in the market that are running on all cylinders right now, the defense sector is one of those, and it's not very economically cyclical. Meaning, if the economy tanks a little, it's not gonna, hurt that defense sector. So, very, very positive stuff. We'll see. This is one that could trigger bullish on an upside crossover crossover. I would, if I had to venture a guess, my guess would be no, that it wouldn't be a trigger, but it does have the potential. Alibaba, this is one that has more potential for a downside trigger after a little upside move, but you'll see where the 3 and the 7 are. They're nowhere close to any sort of crossover action. Same with something like Bank of America. Nice little bounce on it here today, but you can see nowhere close to 3-7 action. Now, this would be a higher low for Bank of America. If it did have a 3-7 crossover, this could trigger, just because of where it is relative to its range, and it would probably take moving above 29 to trigger. We'd probably see we'd be talking about a stock in the middle of its range, so does have a potential for a bullish signal. Bristol, after some of this real turmoil that it went through here in July, has really been perking up and trading nicely. It's one, though, that came off the lows with the 3-7 crossover, so never got a signal there on it. But if it has a little bit of a dip, higher low, and then a rip, definitely be something to potentially have a signal. Caterpillar, we talked about that. You'll notice there's a lot of charts like Caterpillar. Right? A lot of charts look like Caterpillar there, in the watch list, and that's just natural. Here's Chipotle, had a crossover, downside crossover, what I believe on Monday, upside crossover on Tuesday. Consolidation risk was high. Where I stand with this stock. I'm extremely bullish. Chipotle Mexican Grill. I strongly believe this goes above 1,000. When does it go? Fine. Timing is always a little different, but this is one that I sure wish had a trigger when it moved, but it just didn't. Conoco, which pushed into another new low, so to get an upside trigger is almost impossible there with the way the challenge is structured. Same with something like a CSX, right? And there's just a lot of those, right? Chevron would have potential to trigger for the challenge as it is coming off a higher low, and you can see the Stoke 39.1, not at the depths that it was in April and May, so would have that potential. Delta would have that potential. I'd love to play some Delta calls if we get a signal there. Triple D, big gap down. This is one that is essentially gone off the watch list. Why? Trading below 10 has just killed the options. They're just not tradable when it comes to the challenge. So that's going off the watch list, which is too bad. I love trading Triple D. Disney, earnings yesterday, a little bit of, relief bounce here today, but, nowhere close to any sort of crossover action there. So, just EOG Resources, kind of the same as Conoco, that same type of chart. Now, Facebook, this is one where, we've had a very kind of normalized pullback for Facebook. We see a little 3-7 crossover action, could easily have a bullish signal associated with it. So, Apple, Facebook, kind of in that category where, the pullbacks haven't been so strong that they couldn't trigger bullish, right? FCX, the pullback's just been too strong to trigger bullish on the next 3-7 crossover to have that potential there with it. FedEx, now this is a really interesting one. We saw the saga with FedEx yesterday with they're not renewing up with Amazon, and we've seen Goldman Sachs come out, put FedEx on their conviction buy list. And this is one where we've kind of been creating this little base, a few higher lows. It's not a stock I've been very bullish on fundamentally, and I'm still not overly bullish on it fundamentally. But when we look at kind of the way things are shaping up, we could easily see a bullish signal come into play on the next 3-7 crossover. So it's, with that Facebook, with that Apple, as far as having that potential. Gold, there's no potential for an upside signal or a downside signal anytime soon with where those 3 and the 7 are. So, just not anywhere close here. It's not going to be a trade I'm able to make for the next, I would guess, at least 2 to 3 weeks there. Halliburton, kind of like EOG Resources, ConocoPhillips, just not not something that'll be tradable on the next 3-7 crossover to the upside. kind of in that same category. Home Depot, this is in the Facebook, Apple, FedEx category. I believe, let's see when Home Depot earnings are. Let's double check here. I know they're a little later than normal. Yeah, the 20th. So in 2 weeks, we'll see Home Depot earnings here. But do have the potential to have a signal before then. Honeywell, this is one that the sell-off was pretty dynamic and pretty dramatic here, and one that the chances of triggering bullish on the next 3-7 cross are very slim. Could it? It could, but it's not one that I would expect to. IBM is one I'd throw in the Apple, Facebook category. It could trigger on the next 3-7, to the upside there, but it's nowhere close to it. Intel, same thing, has the potential, but nowhere close. But you can see JD, a lot of these, they just have that same picture here to them, and when we see that picture, I know, okay, it's not going to have a signal anytime too soon. Johnson & Johnson just been tagging up and down, just consolidating here around the 130 level. It's one we've seen several crossovers come in, but all with high consolidation risk. Juniper, this is one that has been consolidating for quite a while, right? And this really choppy consolidation finally broke down to the upside. If you want to see a bear trap in action, you take a look at something like a Juniper, but to trigger for the challenge, it would be very difficult. JP Morgan, it's kind of like Bank of America. It could trigger bullish, but you kind of see that same chart, right? Coca-Cola had an upside crossover yesterday on it. And I was talking with my brother, who's helped me put all this together, and I said I really think Coke is going to trigger, and no, it didn't. Unfortunately, we did not see a trigger there. Consolidation risk just too high. Las Vegas Sands, you throw this in the category of, just some of those that have been boat raced, and, the chance of triggering is very slim to the upside there. What would some of these have to do to trigger to the downside? Well, something like an MGM would need an upside crossover and then a downside crossover. And that may take a few days to materialize, to kind of set up there for a lot of these stocks. And so that's kind of what it would take there. Triple M, that's what it would take. Where I stand with Triple M. I'm pretty darn bearish when it comes to Triple M. I'd love to play it to the downside. The last 3-7 downside cross, I thought, man, this has a good chance of triggering. It just didn't, because the stock had pushed into a new short-term high. So we just didn't get a signal there. Altria, this hasn't signaled all challenge, and that's kind of unusual for it. Altria has been one that historically has a lot more triggers than other stocks, but new low, chance of triggering bullish is almost zero. Almost zero. Microsoft almost has a 3-7 crossover on it here today. This is one that we talked about the other day. Is one of my favorite stocks on the watch list, one of my favorite stocks in the market, and I do believe if this market does go V-shape, it's not going to go V-shape because investors are buying value. It's going to go V-shape because investors are buying growth, and Microsoft, Visa, Adobe, those are those names, right? Micron, man, this move on Micron was massive, right? And we talked about on the earnings how some things changed, and we could see some short squeeze. Well, the shorts have been squeezed. The shorts were absolutely bamboozled out of this and crushed out of this. But man, I don't see a scenario where the shorts aren't looking at this and saying, man, I want back in, and but nowhere close to a signal. The last 3-7 crossover off the high. And you hear me, I'm kind of sounding like a broken record with a lot of this, right? Well, because a lot of the charts, they're just in very similar positions. When we get a market that kind of just everybody into the boat, everybody out of the boat, we lose the differentiation. So it becomes less of a stock picker's market, much more of a just, hey, everybody in, everybody out type of a deal. And there's been a little differentiation in this market, but not nearly to the degree that we've seen, here over the last, 4 to 5 months. So anyway, that's where most of these things sit. I'm coming down. I want to show Visa here. Let's pull up. Let's see where Visa is. Target almost a 3-7 crossover. We'll see where that lies. I would love to play Twilio. I'm not. In fact, I'm pretty confident that an upside crossover would not be a bullish signal. But man, I think this pullback's a really nice spot for Twilio. But yeah, if we come in Under Armour, we saw this changed on earnings. Yeah, I mean, this thing has just been boat raced all the way back down to 21. I do think it will get up off the mat, over the course of this quarter. I don't think it's going to happen anytime soon. And then, yeah, here's Visa. And you'll notice Visa trading almost identically to Microsoft. Right, almost the identical chart, almost the identical action there in that, and does have a 3-7 crossover happening now. It wasn't when I got on video. Well, sorry, it's 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 what, 8 cents short of a 3-7 crossover, but one that could trigger here by the end of the day. We'll see where things set up here with it. And then Valero. This is one that could easily trigger to the upside on a 3-7 crossover. This is in that Apple, Facebook, Home Depot type category. So we have a lot on the watch list that, if the market does decide to run, that would very likely be upside triggers, right? But, there are a lot on here that just, no. And the majority of these, what do they need? They need an upside cross and then a downside cross to trigger bearish. So, we're not looking at a lot of things that could trigger bearish here today or tomorrow, but we get a whirlpool, a little more rally in it, and then a downside 3-7 cross. We could easily see a bearish signal come into play here for it, or for a Walmart, or any of these that kind of like a U.S. Steel, where they're kind of sitting at these lows. The 3 is well below the 7, but we'd need to see it kind of get that upside action and then that downside action, similar to this right back here, right? Where you get the upside pop and then the downside drop. And that's kind of what we would need to see, or something like this right here where we get the upside pop and then the downside drop, albeit this was not a trigger simply because of the magnitude of movement. But anyway, you can kind of see what it would need in order to create a trigger there. Okay. Alrighty. Just looking at the market, Bill, kind of watching it out of the corner of my eyes, kind of looking for that 20K volume. I figured if we get the 20K volume, I'll go out and put $500 to $1,000 of the challenge on it and kind of use it as a, training tool. But we haven't seen that here yet, so I'm not going to go and do that. If we do see that when I'm on video this afternoon, I'll take a look and go and make a small trade there on it. But it's just not there yet, and so not going to, not something I can anticipate. It is absolutely something to react to, not to anticipate. Yeah, we'll go from there. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.